Today we're going to talk about two of the largest ad companies in the world because they both are set to announce their earnings this week. The first one we'll talk about is Google. We'll go over analyst expectations for their earnings as well as what their revenue and EPS numbers have looked like over time, and finally go over potential catalysts that could be discussed during this earnings announcement. And the second company that we'll talk about is Meta. They also announced their earnings this week, and we'll go over the same information, EPS and revenue estimates from analysts, as well as long-term trends in EPS and revenue, and finally catalysts that could be discussed during the announcement that could propel the stock into the future. So if you enjoyed the video, make sure to drop a like down below, and if you want to see more videos like this one, subscribe. Before we jump into these two companies, I do want to disclose that I own both of these companies. I don't actually own them in my YouTube portfolio, but I do own them in a different portfolio. My YouTube portfolio is sitting at just under $54,000 right now. And honestly, one of these two stocks I do see as a potential add to this portfolio. However, right now, my only positions are in Alibaba, Apple, Microsoft, Palantir, which has been on an incredible run. It's now my highest performing stock by overall return in this portfolio, as well as PayPal, SoFi, Visa, and then again, I have a couple of dividend ETFs with SCHD and VYM. With that out of the way, let's go ahead and jump into Google. Right now, it's trading at a share price of just under $167 per share. And if we look from its all-time high of $193, it's actually down around 13%. And this recent dip in the stock price isn't for a lack of performance. They beat top and bottom line numbers in the most recent quarter, as well as have consistently beat top and bottom line numbers over the last 3 quarters. They are expected to announce their earnings on October 29th for the 3rd quarter, and analysts are expecting EPS numbers to come through at $1.85 and revenue to come through at $86.23 billion. And Google's top line numbers are seeing a reacceleration of growth. If we look in 2022, their revenue was basically flat for an entire year. They had $282.1 billion in September of 2022, and by September of 2023, that had only grown to $297.1 billion. However, in the most recent quarters, they have seen this acceleration in growth of their top line, where they now are bringing in $328.28 billion for the trailing 12-month period. And here's that top line growth shown graphically. They went through an explosive growth period in 2021 and early 2022. However, that settled down and they're getting back to growth numbers that we're seeing are similar to what they had back in 2019 of around 20% revenue growth year over year. And this is a very similar trend to their EPS numbers. EPS for the trailing 12-month period is currently sitting at $6.97. They saw this EPS dip down to around $4.50 in late 2022 and early 2023. And this was a fall from around $5.50 in 2021. However, again, they have seen this reacceleration of growth in these numbers where they're actually sitting higher than where they were in 2021, where there was a lot of hype around the internet and a lot of people were being forced to online. And this really propelled their business. We could see how much growth they experienced in a very short period of time, because in June of 2020, they were only bringing in EPS of $2.28. And over the course of a couple of years, they accelerated up to around $5.50, and they've been able to maintain these higher EPS numbers. And in the last 4 quarters, that equates to a growth of 36% year over year, 52% year over year, 61% year over year, and in their most recent quarter, 31% growth year over year of their EPS. So right now, Google's stock price isn't really representing the performance behind the business. They're clearly seeing very solid top and bottom line growth numbers, but the stock is only up around 19% year to date, while the S&P 500 is up over 20% year to date. And likely a lot of this has to do with the fact that Google is an ad-based company. A lot of the ad-based companies like Google as well as Meta tend to trade at lower valuations just because of the volatility of this market. However, Google for years has been trying to find different ways to diversify their company and get into different markets. And one of those could be their new business venture, Waymo. Waymo is a company that Google has invested a lot of time and money into. They are their own autonomous taxi network, and they've been drawn into the news a lot recently with the announcement that Tesla is going after the same market. However, Tesla is falling behind in this market because Waymo is already offering rides. They currently have grown their numbers in the last 12 months from weekly paid rides of 10,000 to now over 100,000. And they have actually grown these numbers by 100% over the last 6 months, from 50,000 weekly rides to again 100,000 weekly rides. And this could really just be the start for Waymo, because if we compare to where Uber is currently sitting at, they are offering 200 million rides per week. If Waymo captures half of this market, that would be 100 million rides per week. If we say that they could get $30 per ride, that is equivalent to $300 billion of potential revenue. And ultimately, this should be higher margin revenue than a company like Uber, because they're not having to split that revenue with the driver. So ultimately, some announcements around Waymo and its performance, especially in relation to Google and their investment in Waymo, could be an overall catalyst for the company. But again, here on Yahoo Finance, they have an EPS estimate of $1.85 with a low estimate of $1.64 and a high estimate of $1.98. These are all above a year ago's EPS number of $1.41. And right now, analysts are pretty bullish on Google. The current price, again, is sitting at $167 per share, and the low price target for 1 year from now is $185 per share, with an average price target of $202 per share and a high price target of $220 per share. And Google has a lot of positive things going for it. Not only are they consistently growing their top and bottom line numbers, but even the valuation right now is sitting relatively low. Their forward PE ratio is currently sitting at 18.83, which is below the broader market. Now let's jump into a stock that is in a far different situation. That is Meta Platforms. They are up 65.5% year to date and down slightly from their all-time highs of just over $600 per share. And Meta is another company that has consistently beat on their top and bottom line numbers over the last 3 quarters. In their most recent quarter, they beat EPS estimates by almost 8% and revenue estimates by almost 2%. They're expected to announce their earnings this week on October 30th, and analysts have an EPS estimate of $5.27 and a revenue estimate of $40.3 billion. And because Google and Meta are in the same market, their revenue trend looks very similar to what we saw with Google. However, Meta actually saw their revenue year over year go into the negative, dropping by 4.5% year over year in 2022. However, more recently, their trailing 12-month revenue has accelerated by 22% year over year to $149.7 billion for the trailing 12-month period. And EPS has also rebounded in a massive way. In early 2023, their EPS dropped to $8.07 per share for the trailing 12-month period from $14 in 2021. They have since surpassed this $14 by a long shot. Their current trailing 12-month EPS is sitting at $19.56 per share. For me personally, what I want to pay attention to in this earnings announcement is where Meta is headed in the future, especially around their augmented reality. We saw an announcement earlier this year around where Orion is headed and what they have planned for in the future, and I think this is massive. I do believe that augmented reality will eventually replace the iPhone and smartphones in general, and I do think that Apple is starting to see that trend and they're trying to play catch up to where Meta is at. So if Meta comes through with more announcements around this technology during their earnings report, I think that that could boost the stock in a massive way. And honestly, right now, Meta has a lot of momentum behind the stock. They have 42 analysts covering on Yahoo Finance with an average EPS estimate for this quarter of $5.24 per share, a low of $4.75 per share, and a high of $5.80 per share. A year ago, they put up $4 of EPS. So any of these moves would be a massive increase year over year. And for current price targets, the low price target is $260 with an average price target of $606 and a high price target of $811. And Meta is another company that has a lower valuation, again, just due to the volatility of the ad space and what that means for the business moving forward. Its current forward P ratio is sitting at a 23.81, which the market right now is trading around a 24 forward P ratio. So Meta is trading basically in line with the market, despite the fact that it's growing significantly quicker than a lot of companies out there. So as I mentioned at the start of this video, I think one of these two companies is a little bit more interesting than the other. For me, that is Google or Alphabet. I think that Google is in a lot better position in terms of its valuation valuation being lower. So even if the market dips, it won't drop as much as these larger companies that are trading at larger valuations. And I think right now Google has a lot of potential upside. They haven't really shown to be the number one player in anything other than search. And I think if Google can try and innovate a little bit quicker, especially in AI or the cloud space, they could turn into the number one player in those markets. It just means that Google needs to basically out innovate a lot of these other companies. And that's something they've struggled with over the last couple of years. But as I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the final Halloween joke of the year, why doesn't anyone tell mummy jokes? Check the comments down below for the answer. Thanks for watching.